October 1929. Wall Street is burning, banks collapsing, millionaires becoming beggars overnight, crowds screaming, brokers weeping, the greatest financial apocalypse in American history. And in the eye of this hurricane sits one man. He's not panicking, he's not screaming, he's sitting still, counting. While others lose everything, he's making 100 million. How does a 14-year-old boy with chalk dust on his fingers become the only person who saw the end of the world coming? To understand that, we need to rewind, back to where it all began. Section 1. The boy who watched the tape. He wasn't a trader. He wasn't even a man. He was just a 14-year-old boy with chalk dust on his fingers, standing in front of a wooden quotation board, copying numbers from the ticker tape, again and again. Picture this, 1892. No smartphones, no Bloomberg terminals, just a kid in Boston staring at numbers like they were Pokemon cards. But there was something different about this boy. Most kids would have seen noise, just prices. But this boy, he saw rhythm. He remembered how a stock would climb to a certain number, touch it, then retreat, touch it again, and retreat again, like a wave hitting a wall only he could see. He didn't know the name for resistance, but he knew what hesitation looked like. He remembered how the numbers moved before a rise, how they hesitated before a fall. It was like watching someone play Guitar Hero with stock prices, except this kid was hitting every note. He didn't call it price action. He didn't know what technical analysis was. But deep inside, he knew something few grown men ever would. The market was speaking, and if you stared at it long enough, it whispered. He didn't have money. He didn't have mentors. All he had was chalk, a board, and obsession. Think of it as the 1890s version of a teenager glued to TikTok, except this addiction would make him millions. Every tick was a clue, every hesitation, a signal, every spike, a question. He started jotting things down in a little notebook, not to prove anything, just to test his mind. He didn't even realize it, but he was building his first trading system, from sheer instinct. He didn't care why prices moved, he only cared how. And in that quiet repetition, in that dusty little brokerage office, a giant was forming. Jesse Livermore didn't become the greatest trader alive because he was taught. He became great because he couldn't stop observing. He was the boy who watched the tape and saw the market soul before anyone else did. But here's the part no one tells you. What happens when a boy starts winning? Too fast? Too soon? Section 2. Nothing new on Wall Street. There is nothing new on Wall Street. There can't be. Because speculation is as old as the hills. Jesse Livermore. That quote sounds simple, maybe even cliché. But what if I told you? It's the most important truth in all of trading. Because here's the thing. The charts change. The assets change. The tools, the platforms, the algorithms, they evolve every year. We went from ticker tape to trading view, from pit trading to APIs, from stocks to crypto to NFT monkey JPEGs. But human emotion, fear, greed, regret, hope, that hasn't changed in 1,000 years. In 1901, a man bought on a tip, held too long, and lost everything. In 2024, a man on Reddit did the same thing. With a meme coin, different names, same ape brain. Livermore didn't predict the market like some fortune teller. He didn't care what the crowd was saying. He studied how they behaved when money was on the line. It's like watching people at a casino. The games change, but watch their faces when they're down 50%. That expression is timeless. And what he found was devastatingly consistent. When people think they're being rational, they're often just rehearsing old emotions in a new disguise. That's why this section matters. You're not here to learn a new trick. You're here to stop falling for the old ones. Think about the last time you overtraded, or FOMO'd into Dogecoin at the top, or stayed in too long because you just knew it would bounce. Spoiler alert, it didn't bounce. It never does when you just know. Now ask yourself, was that decision really about logic, or was it an ancient instinct dressed up in modern confidence? Because if you don't train your psychology, you'll be another actor in a play that's already been written. And the market, it's the stage, the tape, that's the script. And history, it always repeats, because we keep showing up with the same emotions. Livermore learned this the hard way. But before he mastered himself, he had to fall into the oldest trap of all. What happens when success tastes too sweet, and your ego starts trading for you? Section 3. The Bucket Shop Edge. Let's start with this stat. Jesse Livermore turned $5 into $1,000 before he was 16, trading in a bucket shop. That's like turning your Starbucks money into a MacBook Pro. In 1890s money, as a teenager, no chart, no internet, just tickers and instinct. For context, bucket shops were basically the Robin Hood of the 1890s, except sketchier and with more cigars. Now, pause for a second. Have you ever entered a trade, not because you knew what would happen, but because you felt it? The rhythm, the pulse, the tension in the tape? That's what Livermore was doing. He didn't know the terms. He didn't need moving averages or RSI. RSI? The kid didn't even have reliable toilet paper, but he had something better. He was watching something deeper, the behavior behind the price. He noticed something few traders ever see. Even today, he saw what he'd later call pivotal points. A stock would trade calmly for days, bouncing between two numbers. But the moment it broke decisively past the high point, it was like a dam breaking. The flood was coming. He wouldn't buy in the quiet. He'd bet big, right as the dam broke. He didn't overthink it. He just started betting small when those patterns showed up, and they worked, over and over. Livermore wasn't guessing. He was clocking the market, just like a boxer who knows the moment right before a punch lands. He learned to sense movement before it exploded. That was his edge. Not indicators, not inside tips, not leverage, just pattern recognition, sharpened by obsession, tested by repetition. Today we call it price action trading. Here's what he did that most traders today still ignore. Watch behavior before big moves. Ask, what do price movements look like right before a breakout or breakdown? Journal the setups. He wrote everything down. No exceptions. He didn't just record wins. He recorded what he thought would happen and why. Bet small, track big. He used small trades to test conviction, not to make money. Profits came after the pattern was real. Today's traders skip observation and go straight to execution. They see one YouTube video about this pattern, prints money, and YOLO, their rent. They want the reward without learning the rhythm. But Livermore didn't chase the market. He stalked it, like a predator waiting in silence. He wasn't a gambler. He was a pattern hunter. But here's the trap. When every trade works, you stop observing. You start believing you're the genius, not the method. And that's when the market stops whispering and starts punishing. Section 4. Success is a dangerous teacher. Success is seductive. It flatters you, it lies to you. And if you're not careful, it becomes the poison in your cup. Sweet, silent, and slow. It's like dating someone way out of your league. Feels amazing until you realize they're just using you for your Netflix password. Jesse Livermore was winning. Trade after trade, pattern after pattern. The numbers obeyed him. The market bowed to him. He thought he had it mastered. Narrator voice. He did not, in fact, have it mastered. And that's exactly when it turned on him. Because success, especially early success, doesn't teach you discipline. It teaches you delusion. You stop asking why something works. You just assume it will, because it has. It's the trading equivalent of thinking you're good at karaoke because your drunk friends clapped. You stop observing. You start believing your own myth. That's what happened to Livermore. Flush with confidence and cash, he started trading bigger, bolder, faster. He took trades outside his edge, ignored signals, dismissed caution. Because he wasn't following the market anymore, he was following his ego. Fun fact, the market has destroyed more egos than Twitter and dating apps combined. It wasn't that the market betrayed him. It was that success had tricked him into ignoring the very skills that made him great. Observation, replaced by assumption. Discipline, replaced by emotion. Edge, replaced by arrogance. And when the market finally snapped back, it didn't just take his money, it shattered his self-image. Imagine thinking you're Batman, then getting mugged by a teenager with a butter knife. That's how it felt. Success is like chocolate-covered glass. It feels smooth at first, sweet even. But one bite too deep, and it cuts you from the inside. You don't notice the damage until it's too late. Think back to your last winning streak. Did your discipline go up or down? Did you follow rules or intuition? Did you reflect or ride momentum? Did you start checking your P&L every 30 seconds like it was your crush's Instagram story? Now, ask yourself, were you still learning, or were you high on your own results? Because if you stop learning when you're winning, you're not building mastery. You're building your downfall. Livermore learned this lesson, Not from theory, but from losing everything he thought he'd mastered. But what if failure wasn't the end? What if it was the reset he needed to begin again, for real? Section 5, Losing to Learn. At first, he thought it was just a bad trade, then a bad day, then a bad market. Classic trader progression. It's not me, it's the market, also the Fed, and probably Mercury in retrograde. But deep down, Jesse Livermore knew the truth. The market hadn't changed. He had. And now it was teaching him, brutally. One by one, his trades unraveled. The patterns he once trusted slipped away. His edge blurred. His instincts failed. Confidence turned to hesitation. And hesitation, it turned into loss. Fast. He went from golden boy to broke. From genius to ghost. From I'm the Wolf of Wall Street to mom. Can you Venmo me $20 for ramen? No one prepares you for the silence that follows a losing streak. The friends that vanish. The voices in your head that say, maybe you were never good. Maybe it was all luck. The same people who called you genius now won't even like your LinkedIn posts. Livermore spiraled, emotionally, financially, psychologically. He stopped trading, stopped talking. For a while, he even stopped believing. But here's what made him different. He didn't run from the pain. He wrote it down. While most traders delete their apps and pretend crypto never happened, this madman journaled his failures like a scientist. He studied every wrong move, every emotional reaction, every trade that came from ego, not edge. He autopsied his failure until it bled a lesson. He stopped chasing the win and started chasing the truth behind the loss. He reconnected with observation, no trades, just pure tape reading, for weeks. Like going back to the gym after eating pizza for 6 months, painful but necessary. He asked better questions. What made me feel invincible? What made me ignore the tape? Why did I think buying at all-time high was catching momentum? He forgave himself, not for being wrong, but for believing he shouldn't be. Failure wasn't the opposite of Livermore's success. It was the furnace that forged it. Every great trader gets burned, but only the disciplined ones step back into the fire, with armor made from insight. The market is basically a very expensive therapist that charges by the mistake. Livermore's return wasn't dramatic. There were no overnight wins, no viral comeback, just quiet progress, grounded in one new rule: never trust a tip. Trust the tape. Section 6, Trading Without Tips. Jesse had a vow, an iron vow: trust the tape, not the tongues. But then one day, a powerful friend, a true insider, leaned in and whispered, "This is a sure thing." For a moment, war erupted inside him. Jesse's logic screamed, "The tape says nothing." But his ego whispered back, "But this is your chance to shortcut success." And that day, he listened to ego. He placed the bet on a friend's word instead of the market's truth. The result? A heavenly slap. A loss so huge it didn't just take his money, it tore apart his self-trust. After that painful loss, he carved his vow again. This time in blood and tears, never again. Here's the hardest truth in all of speculation. The moment you act on someone else's tip, you've already lost. Maybe not money, not yet, but clarity, control, conviction, because you didn't make the decision, you borrowed it. Tips kill edge. They rob you of pattern recognition. They bypass your process. They replace your observation with obligation. Following tips is like using someone else's Tinder profile. Even if you get matches, they're not really yours. And worst of all, if the trade goes wrong, you can't even learn from it because it wasn't really yours to begin with. After that loss, Jesse made a vow: I will never again act on another man's opinion. Not friends, not insiders, not the newspaper, not even the experts, not even that guy on Twitter with the laser eyes and 100K followers, especially not him. He returned to what made him great in the first place: the tape. Silence the noise. For 1 month, no media, no forums, no influencers. Just price action and personal notes. Yes, this means muting crypto Twitter. Your mental health will thank you. Rebuild your filters. When a stock moves, ask, do I see the setup, or am I reacting to the hype? Track intuition versus influence. After every trade, write. Whose idea was this, truly? Make peace with missing out. You'll skip some winners, but you'll keep your soul. FOMO, man, fear of missing out. JOMO, joy of missing out on other people's losses. Tips are like sugar sweet in the short term, but they rot your strategy. You don't need more noise. You need more silence to hear the market, to hear yourself. That's what Livermore did. And when he stopped following, he started leading again. But the real test wasn't theory. It came in 1907 when the world collapsed into panic, and Livermore made the most important decision of his life. Do you freeze with the crowd or think with clarity? Section 7. The Panic of 1907. October 1907. Banks were collapsing. The stock market was in free fall. Men were lining up outside closed doors, begging to withdraw what no longer existed. Imagine 2008, but with top hats and no Twitter to panic tweet on. It was the first modern financial crisis in American history. And while others panicked, Jesse Livermore watched. No noise, no tips, just tape. And what he saw was blood. But he didn't run. He didn't freeze. He shorted. While everyone else was Googling how to grow food in apartment. Wait, no Google. While everyone was learning to grow potatoes, this absolute madman was betting on more chaos. While newspapers screamed, "Don't sell," while bankers begged, "Stabilize the market," Livermore saw something else. Volume surging, weak rallies failing, panic accelerating. To him, it wasn't doom. It was opportunity, structured, observable, inevitable. It's like seeing a car accident in slow motion. Tragic? Yes. Predictable? Also yes. He didn't short on fear, he shorted on confirmation. In a matter of weeks, Livermore turned a multi-$1,000 short position into $1 million profit, equivalent to over $30 million today. That's like turning a Honda Civic into a yacht during an apocalypse. While others were trying to survive, he was compounding. Emotional distance. He wasn't reading headlines. He was reading behavior. CNN wasn't invented yet, so he couldn't doom scroll. Lucky bastard. Independent thinking. Everyone said, the panic will pass. Livermore said, the tape says it's just starting. Everyone else was on hopium. He was on data. Courage to act alone. Even when his peers called him heartless, reckless, immoral. They called him vulture. He called it vision. He didn't want to be right. He wanted to be aligned. In times of panic, most people look for reassurance. Traders look for confirmation. One scrolls Reddit for copium. The other reads price action for alpha. The difference is subtle, but life-changing. One chases comfort, the other follows data. When chaos erupts, zoom out and watch behavior, not noise. If you're calm when others aren't, you're already ahead. If your plan is tested by panic and still holds, trust it. Remember, the best time to be greedy is when others are fearful. The second best time is also when others are fearful. And then it happened. As Livermore's fortune grew, so did the whispers. He wasn't just a trader anymore. He was a market mover, a name whispered on Wall Street. A man the president blamed for worsening the crash, from unknown to enemy number one. The 1907 version of going viral, except with death threats instead of likes. And that spotlight, it would change everything. Section 8. The man who moved markets Wall Street used to ignore Jesse Livermore. Now it feared him. One man, one decision, one trade, and the whole market trembled. He went from who to oh shit, what's Livermore doing? Real main character energy. In the aftermath of the panic of 1907, Livermore wasn't just wealthy, he was dangerous. Bankers blamed him for accelerating the crash. Newspapers whispered his name like a villain. The president himself, Theodore Roosevelt, condemned speculative wreckers. Teddy Roosevelt literally gave speeches about him. That's like getting subtweeted by the president, but with more mustache. But Livermore wasn't wrecking anything. He was obeying price, not politics. He was following the tape, not tradition. He didn't start the fire, he just smelled the smoke and sold it short. A modern equivalent shorting Celsius while everyone screamed FUD. He wasn't spreading fear, he was profiting from facts. He wasn't invisible anymore. Every move was tracked, every rumor traced back to him. Imagine your trading account having paparazzi. Breaking. Livermore bought coffee. Is he bullish on beans? He became a signal. If Livermore is shorting, brace yourself. He was a walking volatility index. Power replaced precision. His trades now moved the market, and that made his edge both sharper and more fragile. When you move in silence, you can study the market. But when the market watches you, it distorts around your presence. Like trying to measure water temperature while everyone's watching you hold the thermometer. The observation changes the outcome. That's what began to happen. Brokers front-ran his positions, rivals leaked his trades. He had to use aliases, proxies, and hidden orders. Dude was basically trading like a spy. James Bond with a brokerage account. Livermore wasn't just playing the game anymore. He had become part of the board. With power came temptation, bigger positions, riskier timing, a sense of invincibility. Again, the same trap that cost him before was now dressed in designer clothes. Success is just failure in a tuxedo, waiting for you to let your guard down. Because here's the truth. The market doesn't care who you are. It doesn't care what you've done. It only respects your discipline. You could be Warren Buffett's son, Elon's brother, or the Pope himself. The market will still humble you if you're sloppy. Fame is friction. The more visible you are, the harder it is to stay objective. Never mistake attention for advantage. Return to edge. Always, even when the spotlight finds you. Remember, the loudest trader in the room is rarely the richest. Livermore had money, influence, and a growing myth around his name. But beneath the surface, his risk tolerance was shifting. And in the roaring decade to come, that shift would cost him everything. Because when the market gives you the crown, it also gives you a target. Section 9, the rise before the crash, the roaring 20s, a time of jazz, champagne, and money. Lots of it. The stock market wasn't just rising, it was flying. Everyone was a genius. Your barber had stock tips. Your grandma was leveraged. It was like 2021 crypto bull run, but with better music and worse hygiene. Banks handed out margin like candy. Ordinary people, shoe shiners, waiters, teachers, became traders. Everyone had a hot tip. Everyone was getting rich. Sound familiar? Replace shoe shiners with TikTokers and margin with 100x leverage and you've got 2021. And in the center of it all, Jesse Livermore was king. He wasn't chasing tips. He wasn't riding hype. He was riding patterns. And he saw what no one else dared admit. The higher it goes, the harder it falls. Physics still applied, even if nobody wanted to believe it. What goes up on pure hopium must come down on reality. But Livermore didn't warn. He watched, and while others screamed, "New era of wealth," he studied the tape. This time is different. Narrator, it was not, in fact, different. He shorted sugar, shorted cotton, shorted copper, and waited, like a coiled spring, for the market to blink. While everyone else was buying innovation stocks, aka companies with no profits, he was betting on gravity, and still, he was making millions. By 1928, his fortune was already tens of millions, unheard of in the trading world. He had mansions, yachts, bodyguards. He became legend. His name symbolized not just money, but mastery. The 1920s equivalent of having a blue check mark, except it actually meant something. But here's what made him different. Livermore felt the mania, but didn't trust it. He enjoyed the rise, but studied the cracks. Like being at a house party at 3 a.m. Sure, it's fun, but you know someone's about to throw up on the carpet. He watched volumes surging without support, stocks jumping without earnings, ordinary men throwing savings into hype. Your Uber driver giving stock tips. You've Autostra's market top indicator since 1929. He said it was not a market, it was a mob. But mobs don't listen, they run. And he let them, all the way to the edge. He was basically watching a car crash in slow motion, but this time he brought popcorn and a short position. He built short positions as the market reached all-time highs. Like buying puts on happiness at a wedding. He waited for confirmation, not emotion. He was one of the only traders in America preparing for collapse, while others celebrated. Everyone else was dancing. He was looking for the exits. It was bold. It was lonely. And it was about to be proven right, in front of the entire world. The tape was whispering again, and Jesse was the only one listening. Everyone else had AirPods in, blasting Ain't She Sweet, while the market loaded up the death metal playlist. Because in October 1929, the greatest crash in financial history would hit, and while fortunes burned, Jesse Livermore would make one of the most legendary trades of all time. Section 10. The day the market died, October 24th, 1929, Black Thursday. Phones ringing off desks, clerks screaming, brokers crying, men fainting on the trading floor. If Twitter existed, it would have crashed from all the ITs over tweets. It wasn't a correction, it was obliteration. And at the center of the chaos sat Jesse Livermore, calm, still, watching the tape. While everyone else was having a meltdown, this psychopath was taking notes like it was a TED Talk. The Dow dropped 11% at the open. Banks tried to prop it up. But panic doesn't negotiate. JP Morgan himself tried to save the market. Even unlimited money can't fight unlimited fear. October 28th, Black Monday. Market down another 13%. That's your portfolio doing the limbo. How low can you go? October 29th, Black Tuesday. Down 12% more. At this point, stocks weren't falling. They were base jumping without parachutes. Billions in wealth evaporated. Once rich men walked home, ruined. Some didn't make it home at all. Wall Street had more tragic endings than a Shakespeare play. And yet, as Wall Street wept, Jesse Livermore's fortune exploded. In a few short weeks, he netted nearly $100 million, the equivalent of over $1.7 billion today. That's by a small country money, or in modern terms, still can't afford a house in San Francisco money. He had shorted the bubble before it popped, with precision, with patience, with conviction. While the world begged for hope, he bet on reality. Hope is not a strategy, but apparently, shorting hopium is. Don't predict, prepare. He didn't know the exact day. He just knew the setup, like knowing your toxic ex will text you. Not when, just that they will. Never fight the tape, even when the market seemed unstoppable. Act alone. No support group, no validation, no applause. Solo mode activated. Difficulty nightmare. Reward legendary. As his wealth soared, so did the public's rage. He became the face of the crash. Papers called him the Great Bear of Wall Street. Crowds threatened his life. He had to hire bodyguards to protect his family, from hero to villain, faster than a Marvel movie plot twist. He didn't cause the crash, he just saw it coming, and positioned accordingly. But logic doesn't calm a mob, and for Jesse, victory came with isolation. Winning while everyone else loses is profitable but lonely. Ask any crypto bear in 2022. Markets are never wrong. Opinions often are. Livermore. He didn't bet on collapse out of malice. He bet on truth. He aligned with behavior, not noise, not hope, not politics. The market is a voting machine short-term, weighing machine long-term. He just brought the scale. Jesse Livermore had done the impossible, predicted the greatest financial collapse, executed the perfect short, amassed generational wealth in days. But in doing so, he had also crossed a line, from trader to myth. And myths, unlike men, can't lose small. They can only fall spectacularly. And what no one knew was this. The hardest part wasn't making the money. It was surviving it. Section 11. The curse of winning too much. He had everything. The money, the fame, the fear and respect of all Wall Street. But Jesse Livermore wasn't smiling. He had won the great game, and yet something inside him felt profoundly lost. Because no one tells you about the silence that follows the ultimate victory. When you get everything you ever wanted, the hunger that drove you simply vanishes. And when you stop hunting, you stop seeing. Livermore began trading less from instinct, and more from the weight of his own legend. He took bigger risks, not because the tape demanded it, but because his reputation seemed to. He assumed his wealth was a permanent validation of his wisdom, forgetting it was only a byproduct of his discipline. Trading doesn't care about your past victories. It only sees your next mistake. And slowly, quietly, he began making them. He overtraded commodities. He missed the subtle cues he once would have caught blindfolded. His $100 million fortune began to erode, not in a spectacular crash, but like a shoreline receding with each tide. And unlike before, this time he couldn't blame inexperience. He could only blame the drift, the slow, imperceptible drift away from truth, from hunger, from humility. Success became a comfortable bed, wonderful to have, but he stayed in it for too long and his sharpest instincts began to atrophy. He was no longer playing to win. He was playing not to lose the myth of himself, and the market doesn't reward ego. It simply waits patiently to punish it. At his peak, Livermore was alone. In his fall, he was even lonelier. He became a fortress of wealth, impenetrable to the outside world, but a prison to the man inside. Do you know that feeling? When you look at something you once mastered, and suddenly you no longer recognize it. The tape was still running, the numbers were still dancing, but for him, the melody was gone. What's worse, never winning at all, or winning so monumentally that you forget the simple truths that got you there. because the higher he had climbed, the more fragile he had become, and soon, he wouldn't just lose money, he would lose control. Section 12. Losing the Edge. It didn't make sense. Jesse Livermore, the man who called the 1907 crash, the 1929 collapse, who once read the tape like a symphony, was now losing. Often, badly. Like watching Michael Jordan miss free throws in a YMCA game against children, and no one could explain it, not even him. Because his strategy hadn't changed, his rules were the same, but somehow his edge had vanished. The market didn't get harder, he just got worse, like your reflexes after 30. He hadn't lost his system, he had lost his state. Trading isn't just pattern recognition, it's internal regulation, clarity, detachment, focus. These aren't tools, they're conditions. You can't trade well on tilt, just like you can't text your ex wisely at 2 a.m. after tequila. And Livermore, once a master of market rhythm, was now out of sync. With the market, with himself. He forced trades. This setup is 6-10, but I'm Jesse Livermore, so it's basically 10-10. Chased reversals, catching falling knives like he was juggling at the circus. Ignored his own warnings. His rules don't do this. Him rules are for mortals. He was no longer responding. He was reacting, trying to recover old magic by pressing harder, not smarter. Like trying to revive a dead phone by pressing the power button 100 times. Physics doesn't care about your frustration, and the market punished him, again and again. Losses triggered ego. Ego triggered revenge trading. Revenge trading triggered bigger losses. The classic death spiral. It's like quicksand. The harder you fight, the faster you sink. He didn't need a new method. He needed a new mindset. But by then, his self-belief had calcified into illusion. His fortune shrank, his credibility eroded, and worst of all, he knew it. That was the dagger. He wasn't just failing, he was watching himself fail, in real time. Like watching your own blooper reel, but it's your life and there's no laugh track. Every bad trade was a mirror, and in that mirror, he saw a ghost of the man who once moved markets with silence and steel. Never confuse memory with mastery. Your Wikipedia page doesn't trade for you. Past brilliance doesn't guarantee future clarity. Yesterday's alpha is today's beta. Your system must evolve. But so must you. The market evolves. If you don't, you're trading dinosaur strategies in a digital age. The tape didn't stop working. He did. And when the edge left, it didn't announce itself. It just faded. Like your phone battery, 100% to dead. And you barely noticed the decline. Until one day, Jesse realized he wasn't trading anymore. He was chasing ghosts. Section 13. The final trade. He once made $100 million. Now, he was sitting alone in the cloakroom of a hotel, a pad of paper, a pen, and a revolver. The man who moved markets, who seemed to bend price to his will, had finally reached a point no chart could ever fix. Jesse Livermore, titan of the tape, master of panic, the great bear, was writing his last entry, not in a trading ledger, but in a suicide note addressed to his wife. It wasn't one bad trade. It wasn't one final loss. It was a slow, crushing erosion, an erosion of edge, of identity, and finally, of hope. He had made and lost fortunes before, but this was different. This was a bankruptcy of the soul. He mastered the tape, but never the stillness of his own mind. He could read the market's fear in others, but could never fully decode his own. On the paper, he wrote, "My life has been a failure. I have no control over my thoughts. I cannot concentrate. I am tired of fighting. I cannot carry on any longer. No charts, no indicators, just the distilled, unbearable weight of a man who felt he had nothing left." Jesse Livermore died with money in the bank. He was not broke, but he was broken. And in that final tragic act, he left behind the ultimate lesson: wealth without peace is just a gilded prison. Your greatest trade will never be against the market. It will always be against the turmoil within yourself. As the candle of his life burned out, the world didn't cheer. It paused. Because the market had lost not just a trader, it had lost a mirror. Section 14. The legacy of Jesse Livermore. He died in silence, but his lessons echo louder than ever. Like Tupac, gone, but still dropping wisdom from beyond. A century later, Jesse Livermore's fingerprints are on every serious trader's desk. His rules, his warnings, his wins, and especially his wounds. Every trading book is basically Livermore said this, but here's my spin. Because while technology has changed, while markets have evolved, the battle between logic and emotion, risk and greed, fear and clarity remains the same. We went from ticker tape to trading view, but we're still the same panicky monkeys. The foundations of modern trading psychology. Long before trading mindset became a YouTube course, Livermore lived it. Risk management as identity. He wasn't a gambler, he was a risk sculptor, position sizing before it was cool. The power of tape reading, no lagging indicators, just raw behavior in motion. Price action is truth, everything else is opinion with extra steps. Self-awareness, over-strategy, because the market doesn't punish ignorance. It punishes self-deception. Your worst enemy isn't the market maker, it's the myth maker in your head. The market is never wrong, opinions often are. Translation. Your P&L doesn't care about your Twitter threads. A loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does damage to the pocketbook and to the soul. Modern version, cut losses quickly. Let your ego bleed, not your account. It is what people actually did in the stock market that counted, not what they said they were going to do. 2024 translation. Talk is cheap. Show me your trades or STFU. Because Livermore was never just a system builder, he was a mirror. He's like the trading world's Shakespeare, timeless human truths wrapped in market drama. He showed us the danger of success. Success is more dangerous than failure. At least failure keeps you humble. The trap of ego. Ego is expensive. The market charges premium prices for arrogance. The cost of chasing more without anchoring to meaning. What's the point of millions if you're miserable? He wasn't just trading stocks. He was trading self-mastery. And losing, winning, then losing again. His account balance went up and down. His wisdom only went up. Markets don't forgive arrogance. Stay humble or get humbled. Edge is temporary. Discipline is forever. Systems break. Character doesn't. The deeper enemy is always internal. You're not fighting the Fed. You're fighting yourself. You've heard his story. You've seen the rise, the ruin, the redemption, and the fall. Now ask yourself, are you trading to escape or to evolve? One makes you rich temporarily. The other makes you wealthy permanently. Because the tools are the same. The tape is still ticking. And if you choose to listen, Livermore's ghost will still whisper, there is only one side to the market. Not the bull side or the bear side, but the right side. The right side, aligned with reality, not your fantasies. Will you be on it? Section 15, From Reminiscence to Mastery. Now that you've walked through the fire with Jesse Livermore, what will you do differently? Will you keep chasing indicators or start mastering your own inner market? Will you keep buying courses from 19-year-olds on YouTube or actually do the inner work? Because Livermore's life wasn't just a warning, it was a blueprint of brilliance and breakdown. And in every moment of his journey, there's something you can use. Free wisdom from a legend, paid signals from a guru, from prediction to preparation. Stop trying to guess the future. Start building systems for every scenario. Livermore didn't need to be right. He just needed to be ready. Crystal balls are for psychics. Trading plans are for prophets. The market does not beat them. They beat themselves. From emotion to execution. You will feel fear. You will feel FOMO. You will feel doubt. You'll feel everything. That's human. But trading on feelings, that's stupid. But those feelings mean nothing. Unless you let them shape your trade. Train yourself to act on plans, not on pulses. Successful trading is always an emotional battle. Your emotions are data, not directives. From ego to edge. Your biggest threat is not the market. It's your need to prove something. To whom? Your ex? Your dad? That kid who bullied you in school? The market doesn't care about your trauma. Livermore made his worst mistakes when he stopped following the tape and started trying to prove he still had it. Your edge doesn't care how smart you are, only how disciplined you are. IQ helps, but EQ pays. Begin each trading day by reviewing rules, not charts. Charts change, principles don't. Track emotional states, not just P&L feeling. FOMO is as important as down 2%. Execute small size on new strategies. Let the market invite you in. Test with lunch money, not rent money. End the day with reflection, not reaction. Journal revenge trading. Trading is not performance, it's practice. You're not on stage, you're in the dojo. Livermore's story was dramatic. Yours doesn't have to be. You don't need a Netflix documentary. You need consistent gains. You don't need to blow up accounts to learn. You don't need to be a legend to grow. Legend status is overrated. Quiet wealth is underrated. You just need to be consistent, curious, and clear. CCC YOLO. In the end, it's not about the millions, not about the trades, not even the wins. It's about becoming the kind of person who can stand inside chaos and still hear the truth. That's the real edge. Everything else is just leverage. That's what Livermore, through all his triumph and tragedy, tried to teach us. Now the question is, will you remember? Or will you reenact? Will you learn from his mistakes or make your own expensive education? Section 16. Your trade begins now. Picture this. You're sitting at your screen, the market hasn't opened yet. It's quiet, but your heart isn't. 9:29 a.m. The most honest minute of every trader's day. Because somewhere in your gut, you know this isn't just about stocks. It never was. It's about how you handle chaos, how you face fear, how you listen when there's no one else to trust but yourself. It's about who you become between 9:30 and 4:00. And in that silence, you remember Jesse Livermore. Not as a hero, not as a cautionary tale, but as a mirror of what it takes to master the only market that matters you. The NYSE is just the gym. You're the real project. It wasn't to teach you how to short or when to exit. It was to show you that every trade is a reflection of the trader. And the edge isn't out there, it's in here, in how you see, act, and respond. Your P&L is just your psychology with dollar signs. You don't need to become Livermore. You need to become the version of you who can sit through uncertainty and still make the right call. Level up yourself. Your trading will follow. Reread your rules. Burn them into your nervous system. Not just know them, become them. Study your emotions. They are your real indicators. Fear, oversold. Greed, overbought. In your mind. Size your risk. Not just your trades, your thoughts. How much mental capital are you risking on each idea? Track your patterns, because the market remembers even when you don't. Your mistakes have patterns. Find them before they find your stop loss. And trade with intention. Always. Every click should have a reason. Because I feel like it isn't one. The market doesn't owe you anything, but it reflects everything. It's the world's most expensive mirror. Look carefully. And when you finally learn to watch it without wanting, without needing, without grasping, you'll see what Livermore saw, not just numbers, but rhythm, not just movement, but meaning, not just charts, but truth. And maybe, just maybe, you'll finally be on the right side. The side where profits are just a byproduct of progress,